Supply and demand absolutely rules the market. I don't care what system you're trading. I don't care what indicator you have. I don't care if you've been in the markets for 50 years and your indicator is telling you that the market should go up. If there's more supply than there is demand, the market has to go down. It absolutely has to. I guarantee you. That's the one guarantee in the marketplace. The one guarantee is if there is more supply than there is demand, price has to go down. All you have to do is look at business. When Beanie Babies were very popular, what did the company do? It artificially limited supply. It would tell people, we're discontinuing this item, meaning we're not going to produce anymore, which means now the supply is fixed at a set amount. So what did they drive? They drove demand. Now you could say that was artificial, but let's talk about computers. The year 2000 comes on. Everybody and their brothers panicking about the year 2000. And what is everybody telling them? Hey, if you don't have a new computer, everything is going to stop working. Now, that didn't happen. In fact, I was running a computer that was built in 1994 in 2000 and 2001, and it worked just fine. There weren't any problems. It didn't blow up. And, of course, we can see that the world didn't end, and everything was okay. But what happened because of that? Well, there was what? Demand. What were people demanding? They were demanding computers. They were demanding water. They were demanding food. They were demanding, in some cases, shelter. People were buying all kinds of houses out in the boonies, guns, ammo. Okay, all sorts of things started to come into demand. Well, if there's more supply of computers, then price is going to stay even, or it's even going to go down. Well, there's enough water to go around, so we don't have to worry about that necessarily. Food, you're going to have all kinds of food. Shelter, now shelter, depending on the area, you may or may not have that. So what happens if they're not making any more land? Price goes up. Guns, ammo, etc. So you can see that the event caused more demand, and supply governed the price. The same thing happens in the marketplace. Because remember, even though a country can produce its own currency, we don't really have real money anymore. What we have is currency. We have lawful money. We have fiat currencies. And what this means is that the central banks from any of these countries who don't have a currency that's backed by gold reserves can just print however much money they want. The United States actually stopped talking about how much money they had, but this was displayed in M1, M2, M3, and these were the money supply. How much money, physical currency, is out there. So you have a real limit to how many dollars people can buy. So if the real number of dollars starts to go way, way down, then dollars necessarily, because there's a limited supply or a diminishing supply, then dollars will go up in value. So what does that mean? Well, let's talk about the interest rate cycle. If the Federal Reserve is raising their interest rate, what does that mean? Well, it means that you get more money for owning that particular currency pair. Why? Well, because a bank might pay you, let's say, 4.75%. So if you own dollars, you're going to make 4.75% annual interest on your money just for owning them, if they raise interest rates. Well, what does that mean? It means because I make more money for just owning the currency,